Hey everybody, I hope everyone is doing well and had a good day. In this video, we're going to review the E-mini S&P 500 5-minute chart for Thursday, April 9th, 2026. Daily chart, this is the Globex chart, so on the RTH chart, this big trend bar would be a gap up. We can see it doesn't really matter either way, it's the same chart. You just see more trend bars with the Globex and more gaps on the RTH chart. Either way, the gap up or the trend bar, the market's always in long, strong bull breakout reversing the tight bear channel. Yesterday was such a big bar, it was unlikely to get another big bar like yesterday. Unlikely that the market would get 1 R of follow through on the very next bar. Big picture, it's probably a big trading range. The market's testing an area where traders got trapped to the left. Trading range through here, bear breakout point in this area where the bear breakout occurred. The market's testing it now. And this might attract some profit taking. A big trend bar in an overall trading range usually attracts profit taking from the traders who bought lower. Expectations for today, probably sellers somewhere above yesterday's high, although maybe not directly above yesterday's high. It's a strong trend bar, and it's a gap bar. There's a big gap between the high of the prior bar and the close of this bar. And the selling pressure through here since the reversal has been weak, so really nothing to sell. So your choices are flat or long going into the day on this chart. And then for the 5-minute chart, using the RTH chart, whenever the market's in a trading range, you know the market's in a trading range when there's an argument for both sides. And by that, I mean for the bulls and the bears. So what's the argument here? Well, the bulls can say the market is in a broad bull channel, higher highs, higher lows. The market rallies for 20 or 30 bars, gets a deep pullback, then rallies again. The bulls are looking for this to continue, for the market to break out to a new high above yesterday's high. And for the bears, they see a bull swing, maybe a trend line here, channel like this, a break below the trend line, and then a retest of the highs, and the market's testing resistance on the open. The breakout point, 57 low. So the bears see a lower high major trend reversal. The bears are hoping for a reversal into bear trend, basically a double top, lower high major trend reversal, looking for this trend line break, the bear breakout, to get a big second leg down. But the trend resumption was fairly strong. The selling pressure through here, not very good, especially from bar 73 to 78. This may need a second leg up first before the bears get their second leg. We talked about this yesterday. This bull breakout, trapping traders below. Trapped traders create support and second legs. Small gap down going into the day. Bar 1, it's a trading range bar. Probably sellers above 1, buyers below 1. Unlikely that 1 remains the high or the low of the day. Bull trend bar on 2, but after the gap down is likely to get a second leg, and I said probably sellers above 1. It's a bad stop order buy signal bar, so there might be more traders selling up here. 3, continuing to break out for the bulls, but testing resistance, breakout points, and yesterday's close. On a smaller time frame, this is a rally, pullback, and a third push to resistance. So increased chance that we have a pullback here after bar 3. 4, it's a high 1 signal, but it's an inside bar, trading range bar at resistance. More likely traders selling above bar 4. 5, breaking out, it's a bear trend bar, second leg down likely. And 6, reversing bar 5. So far on the open, first 6 bars of the day, looks like it's a tight trading range. limit order market, traders buying below and selling above bars. Bulls get a follow-through bar, reversal and follow-through 6 and 7, but a lot of overlap, bar 6 with the prior bar 7 with the prior bar, and testing resistance. The top of this tight trading range, there probably are more sellers above bar 7. 8, bear reversal bar closing on its low. Good looking bar for the bears, but forcing you, if you take the stop order, sell below 8, it's forcing you to sell in the middle of the tight trading range, which is not ideal. Better if you can sell in the sell zone of the bar, sell the pullback. 9 pulls back, bar 8 gets a second leg down. Reversal and follow through, 8, 9, second leg down, likely. A couple ways to look at this. Some traders might view it as a triangle, and it is. Market's in a trading range. 1, 2, 3, 4, 5-legged pattern. So selling here might not be ideal. Might be better to wait for the breakout bar and then look to capture the second leg. But some traders will sell the close or sell below bar 9, expecting it to get at least a small second leg down. We know the daily range is not going to remain from the low of 1 to the high of 3. And I say this often, that bar 1 usually does not remain the high or the low of the day. So it's unlikely that, I should say it's likely that we're going to at least get to the low of bar 1 here. 10, breaking out. Good for the bears, 3 bar micro channel. It's a bad stop order buy above 10, so probably sellers above, second leg down, likely. And that's what we had on 11, 12, 13. Micro channel, minor reversal, second leg down. Now you can count 3 pushes down. 6, 10, and 13. 1, 2, 3 legs down, and testing support. 13, not a very good stop order signal bar, but also not ideal to be holding short because the market's testing support in leg 3. So if anything, better to be flat here. I don't think it's ideal to be holding short when the structure is 3 legs down at support in a trading range. As far as buying, maybe it's okay to buy above 13. Reasonable stop order buy. Bar 14, bull breakout bar. Context good for the bulls, 3 legs down to support in an overall trading range. Reasonable to exit shorts above 14. Also reasonable to buy to go long above 14. 15, bad entry bar for the bulls, but are the bulls going to panic out below 15? Probably not, because now it's 4 legs down at the bottom of a trading range. 15 is a low one short, but bad context for selling, so probably more traders buying below 15. 16, bull breakout bar. Second leg up, likely. 14 got a second leg. Now 16 is likely to get a second leg of its own. 17, breakout follow through, good for the bulls. Second leg up, likely. 18, now it's a micro channel since 13. First reversal, likely to be minor, so probably buyers below 18. Strong momentum for the bulls. Trapped traders below, second leg up, likely. 19, minor reversal, testing the breakout point, bar 15. High, second leg up, likely. 19, not a very good stop order buy signal bar because it's at the top of a trading range, but the momentum is strong enough that the traders who were selling here got trapped. They're using 19 to exit, and that should, most of the time, produce a second leg up. Going sideways on 20, and then the bull breakout, 21. Second leg up likely after 21. The selling pressure through here is fairly weak, so the traders selling for any reason since bar 14 having a very hard time making money. 21 might be, well, it is leg 1 pullback, leg 2 at the top of a trading range, and that can make it difficult to buy 21. But is there anything to sell? Not really. 22, follow through bar for the bulls. 21 gets an immediate measured move of follow through. Possible measuring gap. It's possible that it's a second leg trap at resistance, but this, again, the selling pressure through here is weak. The day's range is likely to expand, and at this point, the two possibilities are a measured move of the opening range, and the market rallies up here, or it's an expanding triangle. We find sellers up here and then sell off to a new low. The selling pressure through here so far does not suggest that expanding triangle is likely. I said possible measuring gap, meaning 21 and 22 is a strong enough breakout that a second leg up is likely, and the market may go for a measured move. Minor reversal 23, probably buyers below. 24 bear breakout, but minor reversal. Look at 23 and 24 compared to 21 and 22. Looks like it's less than a 50% pullback. The traders buying up here, scaling in, very likely going to make money. And then 25, a third leg, climactic leg 3. For the bulls, it's probably a profit-taking bar. It's testing yesterday's high, which might be the top of a trading range. So 25 is good for taking profits on longs, but as far as selling to go short, I would not. It's too aggressive. There's open gaps during the bull breakouts. The selling pressure is too weak. So I think it's okay to sell to take profits, but not as good to sell to go short on 25. The market paused 26, 27, and then yesterday's high, which should be resistance, became support on 28. Market broke above resistance on 25, tried to break back below, failed, and then tried to break below 20 on 28, and then broke out 28 with a follow-through bar 29. Tight bull channel. It's actually a breakout since 25. It can be hard to buy because it's pretty easy to count 4 legs up on 29. But it's always in long. I always say if there's no bear breakout, if you're a price action trader trading breakouts and second legs, where is the bear breakout that you're looking to capture a second leg of? And through here, it really doesn't exist. So it's always in long, tight bull channel. Your options are long or flat. And then another profit-taking bar, 31. Big trend bar. Now it's 4 legs up, far above the moving average, just like 25. 31 is another good profit-taking bar for the bulls. As far as selling the close to go short, still pretty aggressive, not ideal. We may pause and go sideways to down from profit taking, but this rally is so strong that a second leg up is likely, and the first reversal attempt is likely to be minor. Minor reversal, finding buyers below the doji bar, 32. But the traders who bought at the high of 31 are disappointed with 32, 33. They may use the high 1 above 33 on 34 to exit longs, and that can create a more complex pullback. Instead of a high 1, we get another leg down, and then the bulls maybe get a high 2. So the traders who bought up here, trapped, use 34 to exit, and that produces more selling, but this is still a minor reversal. So the bulls are not panicking out here. This is still more likely a bull flag, bull breakout, trading range, and then trend resumption, second leg up, likely. Micro channel down to 39. Good for the bears, maybe sellers above 39 for a second leg, but not ideal to look to sell after all of this buying. It's better to look to trade in the direction of the major trend, and now 39 is a possible high to buy. Hard to buy a 4 or 5 bar micro channel, so a second entry long might be better. Bull breakout 41, second leg up likely. Second leg for this, test of the highs likely. We've gone from the breakout phase to the channel phase because we've pulled back. Now there's more likely sellers at the new high. Just a pause bar 42 before 41 got a second leg. You can see some resistance at the prior high. So 46, bull breakout bar, but a third push, 1, pause, 2, pause, 3, at resistance in what's now probably the channel phase. So better to look to sell up here. But as far as selling to go short, not ideal. There's really no strong bear breakout to take. Bar 48, strong enough bear breakout. And because of where we are in the market cycle, it's okay to exit longs below 48. Some traders will sell below 48 looking for a second leg down. And that's reasonable, but there also might be more sellers above 48. The bull breakout 41 through 46 is strong, and there's probably buyers below. And it'll probably get a second leg up, which we're getting here. Breakout, pullback 49, second leg 49.50. Now it's 3 legs, 1, 2, 3 tests of the channel line. Probably sellers up here. So as strong as bar 50 is, context is not great for buying. There might be more sellers above 50. And then 51, a second reversal, 1, 2. Reasonable to exit below 51 if you're long. Okay to sell below 51 to go short. Expectation that the market is in a bull channel, and bull channels usually evolve into trading ranges. So because of that, the market can test all the way back down to the lowest point in the pullback. Breakout, pullback, channel, and then channel evolves into a trading range. Bar 40 low is a target. Trigger the sell below 51. Reasonable to look to sell here because you have 3 legs up. By the way, what's the day structure? I like to think ahead about what I think the day is doing based on the evidence, and the trading range on the open suggests a trading range day is likely. We can see the market was clearly in a trading range on the open, and then here, the expectation is that the bull channel becomes a trading range. So the market might be going sideways. It might be a trending trading range day where there's a trading range on the open, followed by a brief bull breakout. So lower trading range, bull breakout, and then upper trading range. Bar 55, bear breakout. Strong breakout, similar to 58 yesterday. Second leg down, likely. The problem with selling right here is it's forcing you to sell right at support. I do think 55 will get a second leg down, but I also think it'll pull back first because it's a big bar. So traders selling the close have big risk. If they have bad risk reward and low probability selling at the bottom of the range. So better to sell the pullback after 55. But 55 definitely traps traders above, and because of that, a second leg down is likely. Pullback to the moving average, that was a breakout point. Bar 49, low, was a breakout point. What about buying? Bar 56, double bottom 40 and 55. It's really not great because 55 is likely to get a second leg down, and there's a tail on 56. To me, it looks more like this is a breakout pullback. The bears need a second leg, so better to look for a second entry long before buying. And then the bears, basically it's a spike, pullback, and channel down to 61. Looks like about a measured move there. If you use the body, the high of 55 to the close of 55. Measured move down, very close to the low of 61. And then the structure, I said spike and channel, so it's at least 3 legs down to 61. And then big picture, strong rally, trading range. This might be setting up a big high 2, high 1, high 2. Bull breakout 62, reasonable bar to buy. If you're short, you can exit above it. And if you're flat, you can buy the close expecting a second leg up. It looks like the market's in a trading range at this point. I kind of, like I said, I highlighted it. Might be something like this. And because of that, what we might have here is 3 legs down, spike and channel to support in an overall trading range, and then a strong bull breakout 62. 63, bear reversal bar, but it's similar to bar 15. Are bulls who bought 62 panicking out on 63? Probably not. If anything, they're scaling in to their longs on 63 because the bears have a late leg at support, and 62 is very likely to get a second leg. Bulls get a breakout, high 2, bull flag, and then another breakout, 67. 67 reminds me of bar 21. It's a second leg up, but if the top of the range is up here, then the market is not yet at resistance. The argument for selling 67 is that this spike in channel forms a lower range, and we're testing that resistance. So let's see what the bears can do on the next bar. And instead of selling, the bulls get a follow-through bar above the high of 56. So probably going at least a little bit higher. 54 low breakout point is a magnet. Minor reversal, probably buyers below 69. 70 looks like a good bear bar, but after 67 and 68, a second leg up is likely. Traders selling at the moving average get trapped, and that becomes support. So traders buy at support, the breakout point, moving average, and 67 and 68 breakout follow through, gets a pullback, and then a second leg. Now it's 3 legs up to resistance, the sell zone in the range. So the upside is probably limited. We may start to go more sideways to down here. High one buy 75, but probably more traders selling above 75. And then it's really a tight trading range, limit order market here. Traders selling above bars and buying below bars. I had to get started a little early today. I had to keep it short, and I've got to get going. So that's going to be it for today's end of day review. Thanks everybody for watching. And if you have not purchased the Brooks trading course and you want to be able to read price action and trade price action similar to the way I do it here, you can find a link to the course in the description of this video. All right, that's all the time I have for today. So thanks everybody for watching, and I hope everybody has a good night.